In the international market, US market is waiting for May CPI numbers on Friday. If May's CPI is less than April CPI, market would deduce that the inflation has peaked. That is, more predictable path of rate increases, lower terminal rates, and the yields may come down. US 10-year is now trading at 2.98 percentage points and is at the inflection point. In the crude oil market, crude is trading at $120.8 per barrel. Short-term range for crude is 117 to 121. In the currency market, dollar index is at 102.56. Today's range 102.23 to 102.86. USD CNY or Chinese yuan is at 667. USD INR on the other hand, for an intraday low yesterday, had seen 77.77 and closed at 77.77, which was a day's low. Resistance at 77.35 and support at 77.85 does exist. Watch out for US CPI numbers on Friday. Trading strategy for USD INR. 77.75 is breached now, and everything depends on today's MPC policy for the next action. The obvious outcome is the probability for 78 is increasing as the USD INR never breached 77.50, and today's rate hike scenario indicates 78 is likely. In the domestic market, RBI Governor Shaktikanta Das will address the market today at 10 a.m. Night's probable scenarios are as follows for today's MPC. Number 1, most probable scenario, rate hike in the range of 40 to 60 basis points. Market has already factored in up to 50 basis points hike. Market yields will rise by up to 10 to 15 basis points here at the max. Number 2 scenario is extremely negative scenario, which is rate hike of 60 to 75 basis points, CRR hike of 25 basis points. Market has not factored in this scenario. Yields can rise up to 20-25 basis points in this scenario. The entire yield rise will depend on policy outlook and statements in this extremely negative scenario. Mild to mild positive scenario, which is the scenario number 3, is rate hike in the tunes of 25 basis points. Market will cheer the low rate hike and RBI's soft stance. This scenario has a very low probability outcome and we can't trade this scenario. If this occurs, we will join the bandwagon and offload as much as we can if it rallies, which is highly unlikely. 574 2026 closed yesterday at 726 versus 726. 654 2032 closed at 751 versus 749. 667 2035 closed at 767 versus 766. The 10-year benchmark 654 2032's range seems to be 740 to 758, which explains the volatility expected today. Knight Research's view. First of all, let us congratulate our entire Knight Research team for correctly predicting the path of 10-year yields. Once again, a couple of weeks back, when 654 2032 was at 734 yields, we were the only one on the street which were predicting 740-750 range before MPC policy, and yesterday's close was 751. Is a testament of how we understand bond markets. The market is rather actually attractive enough to enter, and after today's MPC policy, we will be taking strong positions from accrual perspective. Non-SLR below 1 year still remains our favorite spot at this junction, but we are also taking 2 to 3 year positions for non-SLR as well. We at Knight Research team are extremely positive after today's MPC outcome. Our fixed income head, Mr. Pawan Somani, will be addressing all of your concerns and queries for your portfolios and will show you a guide to navigate this volatile market. Let's wait for today's MPC. That's it for today. See you tomorrow with a new episode from Night Snippets.